Hello and welcome to CMC Markets Monthly Outlook for February 2017. My name is Colin Cieszynski, Chief Market Strategist for North America. In this video, I'm going to do a review of what we've seen in the markets in January so far to kick off an active 2017 for trading, and I'll give a bit of a preview of things that we can expect for February. It looks like we could be in for an active month for February. Historically, it's a positive month for stocks because it's during this winter season between about November and April, which is usually the stronger time of year for markets. However, we've had such a huge run up in the post-election honeymoon that it looks like the seasonal correction could start to come early. We've seen this year already the Dow punched through 20,000, but it's been unable to hold above that level. It's starting to come back. The problem is that the markets had priced in Donald Trump for perfection, that he would come in and that he would bring in a whole bunch of measures that are positive for the US economy, that they would get implemented quickly without much opposition, and that the money would quickly flow through to corporate earnings. On the other hand, this is looking like a bit of a fantasy, really, that it's not all sunshine and lollipops out there, and that there's a potential for a lot of upheaval along the way between point A and point B. We've already started to see that with where the problem is, for example, there's the speed of markets, the speed of business, and the speed of government. And we're already seeing quite a bit of conflict coming in between those areas, with the Dow starting to already slip back underneath the 20,000 level. That's likely to be a big source of friction as we move through February, because the markets want to see quick, decisive action, and Trump is trying to do quick, decisive action, but he's about to run into a wall of what happens when you try to get through Congress. It's one thing to sign an executive order and say that we're going to accelerate approval of infrastructure projects. It's a whole other thing to get the approvals and the budgets passed through Congress, and that takes time. And if Congress decides they want to focus on other things first, like tax reform or changing Obamacare, then that could lead to delays in other areas. We're seeing the chaos recently by his immigration order, and that's starting to have people wonder, well, what's going to happen when he starts to focus on trade, and what kind of disruptions could you see to the economy or to trying to move goods over the border if you're already having trouble moving people over borders. So the markets had a huge run here. They look like they could be setting up for a correction in February. February is a month where the rubber really starts to hit the road, where people start reacting to what President Trump actually does rather than speculating on what he might do. And because of that, it looks like we're in for a month of high volatility. In terms of economic news, most of the focus is going to be on the Fed this month. The Fed kicks off February with a bang, with a meeting right away. It's not actually expected to do anything, but what's going to be really important as we move through February with regards to Fed speeches or Fed minutes or anything else, even economic data, is what does it mean for the Fed in terms of raising interest rates in March? The market out there is thinking that the Fed could raise rates 4 or 5 times this year. The Fed party line is 3 times this year. I personally think 2 times this year. But if the Fed is going to raise rates in four times this year, they need to raise rates in March. So that's going to be the big speculation and the big question as we move through the month of February. As I said, the first meeting for the month is actually on February the 1st. The next meeting's in the middle of March. So in the middle of February, we'll also get Fed minutes. We're going to get Fed statement. But even a lot of the economic data, whether it's consumer prices or non-farm payrolls, everything's going to go through this lens of, will the Fed raise rates in March or not? That can have a huge impact on trading in the US dollar, which recently has been flirting with the 100 big round number for the US dollar index. But which side it ends up on could depend a lot on what happens with regards to the March Fed meeting. There's a number of markets that could be quite active in February. As I've already noted, US indices and the US dollar have the potential to be very active. Also, it's still earnings season running through much of February. There's a few sectors that could be particularly focused. Keep an eye on the retailers. There's 2 things that could really move retailer stocks. First of all would be Christmas holiday season sales. A number of companies warned already, specifically Macy's and a few of the others, that the Christmas season wasn't very good for them. The day Macy's put out their profit Warning, their stock went down 14%. So if we see disappointments from retailers, that could have an impact on their trading in their stocks as they move through their earnings season mid-month. The other thing to watch for with retailers is what happens with President Trump and trade, because if we start to see duties being put on U.S. imports from Mexico or from China, that could have a big impact on retailers. That could push up their costs. That could either, and then that leaves them in a position where do they eat the tariff and see their margins take a hit, or do they have to raise prices and potentially see their sales take a hit? So the retailers in particular could find themselves really stuck. Infrastructure stocks have been going up and down as well based on how fast can Donald Trump implement his plans for infrastructure spending. That could be a story that continues to run through the month as well. We'll also be keeping an eye on commodity markets, not just in terms of U.S. demand and what does that mean for commodity prices, but also historically, February has been a transition month seasonally for commodities. A lot of commodities tend to, with the end of winter approaching, a lot of commodities start to shift in terms of dominance. Things like natural gas versus gasoline. A number of the agricultural commodities also tend to see seasonal shifts in the month of February. For this month in particular, we're keeping an eye this year on corn, on Robusta coffee, and also on sugar, as markets that technically have been looking like they could see some activity in the coming month.